Welcome back to ETF Market Insights. I'm Zayla Saunders with BMO ETFs. Today I have the privilege of hosting this special episode with Mark Jarosz, Head of Private Credit. Mark joined BMO Global Asset Management in 2023 and serves as our Head of Private Credit. Mark brings over 20 years experience in originating, structuring, and investing across credit assets. Prior to joining BMO Global Asset Management, Mark was with CPP Investments, where he served as a member of the Private Credit Investments team and was head of the Credit Investment Committee for Antares. He began his career at Coventry, where he spent 10 years in structured credit, so no shortage of experience from Mark. Without further ado, today we're talking about a brand new ETF for BMO, but not new to the industry. This ETF, ZAAA, or some call ZA, offers a slice of the AAA rated CLO market, and it might just be the perfect topping in your portfolio. See what I did there? Quick reminder, we are not providing investment advice. Our recommendation today is all about education and information, and no recommendations are being made. Enough with the pizza jokes, Mark. Let's get into this unique solution and how investors are utilizing this ETF. So let's start at the very beginning. What exactly is a CLO, and help us understand how they work?
Absolutely, and thanks for hosting me today, Zayla. The easiest way to think about a CLO is to think of it as being similar to a simplified bank with only one business line, being corporate loans. The typical CLO has approximately $500 million of assets, and these assets are first lien loans that are floating rate. The loans are generally secured by all the assets of the underlying company. So, if a loan were to go bankrupt, the first lien lenders are the first in line for any recovery. So let's focus on these loans for a moment. Imagine that a private equity firm is buying a company. They might put up half the purchase price in equity, and the remainder could be via a first lien loan. The private equity firm wants to add debt to the investment because it believes the business it's acquiring will grow in revenue and cash flows over time. So a typical CLO, there might be about 200 of these types of loans, perhaps even upwards of 300. In fact, it's a requirement that a CLO form a highly diversified loan portfolio in order for it to achieve a rating from a rating agency. So the loans in a CLO are actively managed. There's currently over 120 CLO managers for us to choose from. And if anything, there's more than enough CLO managers for us to select from. So it's important to note that the pools of CLOs are not random. So the borrowers in a CLO are, for the most part, owned by private equity firms, which means the private equity firm has done a exorbitant amount of due diligence before they inject any equity into it or before they acquire it. So I had mentioned that there were about 500 million of assets. So to finance the purchase of these underlying assets, a number of securities or liabilities need to be issued in order to support that purchase. And these liabilities are rated from AAA being the highest all the way down to single B, and then there's even an equity tranche. And that's the focus of our newest fund here at BMO GAM.
Okay, before we get in any further, I often hear CLOs being mistaken for CDOs, which are collateralized debt obligations. That's what the movie The Big Short was all about and dramatized this massive event. So can you help us understand the differences here and talk about maybe the global financial crisis as well?
Oh, absolutely. A lot of people enjoyed that movie, The Big Short, and I've read the book a few times. And in fact, Michael Lewis is one of my favorite authors.
Hmm.
But the movie is about CDOs, not CLOs. And the nomenclature is actually quite similar, but the results for investors were not. Both CLOs and CDOs use securitization, which takes a pool of assets and repackages them into other securities. Securitization is a powerful tool, but the quality of the underlying assets is key. CLOs own highly diversified pools of senior secured loans to large U.S. businesses. CDOs, as a result, saw defaults on securities that were initially rated AAA, and these were backed by subprime mortgages. For CLOs, there have been no defaults and no downgrades over its 30-year history. They weathered the storms during the global financial crisis and COVID and have proven their resiliency. Actually, post-global financial crisis, CLOs added more enhancements by increasing the level of subordination, thus making the AAA tranche even more robust and thus more attractive.
I think that's a really interesting point to lean on. So when we're thinking about CLOs sitting on the capital structure, where do they rank? Can you help us understand? I know you're getting into that a little bit, but let's go deeper there.
No, absolutely. So AAA tranches are situated at the top of the waterfall payment, meaning they rank first. They're the first to get paid interest and principal. There are very specific rules in the offering documents that govern how the payments flow to ensure orderly receipt and distribution of payment and interest. So again, the first to receive principal and interest. However, in the event of any defaults or downgrades, they flow from the bottom up, from equity all the way up to the higher tranches. Therefore, AAA tranches, given the amount of subordination and enhancements, are very well protected.
The interest rate environment, that's been a buzzword, and I think a lot of investors' minds. Can you share with us how maybe these CLO ETFs, or just CLOs in particular, are different from traditional fixed income or bonds?
No, absolutely. So AAA CLO tranches offer high quality income. And that's a really interesting opportunity for any investor, whether you're institutional or a retail investor. And that's really where we see CLOs fitting in the overall portfolio. It's a chance to earn high quality income without going too far down the credit risk spectrum. And the other big element that I mentioned earlier is the lack of interest rate risk given the floating rate nature of CLOs. So one can take a portion of their portfolio and remove that interest rate risk and remove that unknown out of the equation without giving up on yield. And that we feel is a very interesting proposition. And that's part of what CLOs offer. And then when you combine it all together, allocation sits really well alongside CLOs over time.
Okay, I'm gonna bring the mood down a little bit here, Mark. The tin hat in me, not to be too doomsday with you, but the movie The Big Short did such a great job of dramatizing how serious the drama can be in these types of credit markets. So, is there anything that we should know about that can go wrong in the CLO market, or any defaults we should look out for?
No, absolutely. Good question. As I mentioned, CLOs have been around for well over 30 years. They have performed quite well over that 30-year history through COVID, as I mentioned, also through the global financial crisis. During that time, no AAA CLO tranches have experienced any defaults or downgrades. And again, this speaks to the skill of the underlying portfolio managers whose job it is to select the loans that go into the CLO, coupled with the degree of subordination in a CLO AAA tranche. That really makes this an attractive asset class.
Okay, speaking of attractive, I'm going to ask you a two-part question here. So let's talk about some of the key features and benefits of our CLO ETF, ZAAA. And then I'd also love to focus particularly on the liquidity and the transparency part of it being packaged as an ETF. So let's start with the benefits, high-level overview quickly.
Of course. Taking a step back, the CLO market is quite massive. It has been predominantly owned or traded by institutional investors. So these are banks and life insurance companies. If we focus only on the AAA portion, which is the fund that we're talking about, it is approximately $650 billion in size, with the majority being held again by banks and life cos. And so the CLO ETF market is probably about 4 or 5% of that. And so what we're seeing in terms of weekly volume, there's currently about anywhere from a billion, it could be upwards of 2 billion in flows on a weekly basis. And so what this really speaks to is the breadth and depth of liquidity in the CLO market. Now, as for transparency, we as PMs here at BMO GAM, we have the ability to see every loan that the CLO portfolio manager invests in. So for example, if we're holding 10 AAA CLO tranches, we have the ability to double click on that manager or those managers and to see each underlying portfolio and the loan exposure. And so that could be upwards of several thousand of underlying loans that we get to look into and dissect as a part of our analysis in selecting AAA tranches. And again, we do spend quite an amount of time doing our own research and our due diligence on managers before we select one for the fund. And that coupled with the regular reporting that we get from trustee reports on our holdings really gives us the type of transparency that we're looking for when we make these type of investments.
I thought that was something really interesting when I was learning about this product as well. The fact that there is that active management component within the portfolio. And the holdings, correct me if I'm wrong, Mark, are predominantly North American loans, correct? They're all originated in America. Any in Canada, or it's just North America?
No, that's right. These are predominantly North American, predominantly American. A small sliver will be Canadian. So it's not unusual to see a Canadian name that you and I would both recognize. I was just going through a portfolio holding recently and saw an Air Canada loan in there. So there are some Canadian names that the audience would be familiar with.
Yeah, I think there's so many unique and really interesting components of this portfolio, and you spoke to that. This market is developing and is very popular overseas, but in Canada, it's not as widely known. So it's really exciting that we have this solution here for our investors and our advisors to utilize. So that kind of brings me to our final question. I always want to find out from the portfolio managers, how are people utilizing this ETF in maybe individual portfolios? And then if we put our advisor hats on, how would an advisor be positioning this solution for their clients?
Absolutely. So we've seen investors including AAA CLOs as a component of their core fixed income allocation, as I had mentioned earlier. And we've also witnessed these products as a component of their kind of cash portion or HQLA, the high quality liquid asset, which given the daily liquidity and the breadth and depth of the daily traded activity behind the CLO tranches, it really has proven itself to be a highly cash equivalent type product. And we also studied the behavior of this asset class during different market environments, and we have shown it to be highly stable and resilient with very little market impact during volatile times.
Okay, Mark, we couldn't leave the listeners without three key takeaways or three key things they should know about ZA or ZAA. So if you could leave listeners with three key things about this solution, what would they be?
I would say, first of all, one is getting access to a extremely highly diversified portfolio of loans and credit with very low correlation to other instruments. Secondly, they're getting access to what has traditionally been an institutionally accessible product, in that CLOs up until recently have been only accessible to institutional investors. And lastly, attractive risk return profile where one gets higher yield enhancement over comparable fixed income instruments.
Amazing. So I'm going to paraphrase your paraphrase. The three key things you want to leave us with is number one, diversification. Number two, democratization. Getting this vehicle that was traditionally once only for institutional clients now into the average retail investor's hands. And then the risk return profile being very attractive. Did I get it right, Mark?
You got it perfect.
Amazing. Okay, well, fantastic. That's it for today. Mark, I just want to thank you so much for joining us today on ETF Market Insights and for sharing this exciting new ETF with us. Whether you're hungry for yield or just curious about how CLOs can complement your portfolio, Z AAA might be worth a bite. That's it for today's episode, and we'll see you next time. Bye for now.
Thank you for watching this week's episode of ETF Market Insights. To stream any previous episode of ETF Market Insights series, please visit youtube.com/ETF Market Insights. Remember to hit subscribe and sign up for alerts so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.